Welcome to week 7. I am Prakash Chaudhary, a NISM-certified research analyst. Today we are breaking down the numbers, 7 critical policy updates, week 8 triggers and your Monday playbook. If this saves your bad trade, please subscribe, like and share Market Insights by Prakash. April reversed our worst slide since COVID, where Nifty had bled over 4,100 points, that is more than 15% from December's 26,325 high to an April 2nd low of 22,182. Driven by an April 8th ceasefire, the index staged a massive 2419-point recovery in just 13 sessions to close the month green, proving India's structural story is intact. Furthermore, in this shortened 4-day week, Nifty absorbed 7 regulatory shocks, FII selling, and extreme crude chaos to close resiliently flat. Nifty opened Monday at 23,945 and closed Thursday at 23,997, a gain of meager 52 points. We saw a range of 539 points with a high of 24,335 and a low of 23,796. Sector outperformers were oil and gas, chemicals, pharma, healthcare, and realty. The laggards were PSU banks, IT, and private banks. Looking at specific stocks, the outperformers were Tata Chemicals, HFCL, Bandhan Bank, Sun Pharma, and Syngene. On the downside, Nalco, Shriram Finance, Axis Bank, Indian Bank, and Union Bank. FII sold approximately 13,770 crore rupees. Though this selling is now selective, not a blanket liquidation. Now, here is the data institutional desks pay crores for the 7 critical policy updates. First, the RBI's ECL framework announced April 27th, effective April 1, 2027. This forces banks to use forward-looking provisioning. Stage 1 needs 0.4%, Stage 2 needs 5%, and Stage 3 NPAs require higher. PSU banks currently provisioning around 40 basis points will feel the 5% Stage 2 pinch, which drove this week's 3.87% sectoral drop. HDFC Bank and ICICI Bank are already ECL ready. Second, the RBI NBFC framework from April 29th. NBFCs with 1 lakh crore rupees or more in assets must list. Tata Sons with 1.75 lakh crore in assets missed its September 2025 deadline and now has no exit. This forces an estimated 8 lakh crore rupees IPO, India's largest. Watch TCS, Tata Motors, Titan, and Tata Steel for re-rating as comments close May 4th. Third, on April 30th, SEBI launched a zero-cost debit-free kill switch on Mfcentral.com to prevent SIM swap fraud, locking folios against unauthorized redemptions in 5 minutes. Fourth, going live from May 4th, SEBI PaRRVA, Past Risk and Return Verification Agency, means CARE Ratings and NSC will now independently verify all RIA and IA performance claims, requiring QR codes and banning cherry-picked data. Fifth, SEBI crackdown on Telegram on April 30th, banning the intraday jackpot and professional day trading institute channels for unregistered advisory. They ordered a 9.02 crore rupees refund and a 2-year ban, directly reducing mid and small cap pump and dumps. Always verify your advisors at sebi.gov.in. Sixth, on April 28th, the Labour Ministry issued a heat wave advisory due to the IMD's above normal heat forecast for April to June 2026, rescheduling outdoor work hours. Expect Q1 FY27 margin compression and execution delays. Watch Ultratech, Shree Cement, L&T, IRB Infra, and NCC for guidance cuts 6 to 8 weeks from now. Finally, the government's May 1st GST data showed a record April gross collection of 2.43 lakh crore rupees, up 8.7% year-on-year, with a net of 2.11 lakh crore. However, domestic growth was just 4.3%. The surge was driven by import GST jumping 25.8% due to high crude prices. Still, this strengthens FY27 fiscal stability and prevents bond yield spikes. As we head into week 8, crude dictated volatility, surging to a multi-year peak of $126.30 on Thursday as peace talks collapsed. Fortunately, Friday saw a rapid pullback closing around $111 on unconfirmed whispers of a temporary 3-week ceasefire. Also, watch for the RBI NBFC final notification closing May 4th and the pending binary catalyst of India-US trade deal. Here is your trading playbook for the upcoming week. For long-term investors, accumulate outperforming and fundamentally strong stocks and continue with your SIPs. For swing traders, the 539-point range signals compression before expansion. Keep position sizing at 50% until crude trends confirm. A long close above 24,200 triggers entry into strong sectors, while a short close below 23,700 triggers fresh short. For FNO traders, we are early in the May series and elevated VIX favors option sell. Use a Nifty Iron Condor The strict rule is no naked overnights before the weekend's crude and ceasefire headlines, as gap risk is extreme. If this edge helps, share it with your trading circle and subscribe to Market Insights by Prakash. Trade smart, protect your capital, and see you next Saturday. Thank you.